oh my goodness, what is this? What is Bitcoin? I don't think there will be 11 spot Bitcoin ETFs. I do think the process of closing and consolidation will take us down to 3, maybe 4, but more likely 3. We are not looking to maximize profit on this spot Bitcoin ETF. We are looking at Bitcoin as a public good. It is essentially, from a technology point of view, going to be the financial superhighway of the internet. Never dreamed that commerce or financial services would take place on this network. Now, finally, we're going to have a native currency in the internet, and it will take out a lot of middlemen because it is a peer-to-peer network.
Cryptocurrency Bitcoin, according to ARK Invest CEO Cathie Wood's Thursday interview with CNBC, if the present market trend continues, might potentially hit $1,500,000 by 2030. When compared to her earlier estimate of $1 million, this is a 50 increase. We now see the bull case as more likely as a result of this SEC approval. On CNBC, Wood announced that this had been approved. Spot on Wednesday, the U.S. government officially approved Bitcoin exchange-traded funds. Major documentation from the markets seeking to list the groundbreaking products finally received approval from the Securities and Exchange Commission. On Wednesday, after 10 years of attempting to secure regulatory clearance, something finally happened. ARK Invest is one of the asset managers that have been authorized by the SEC to introduce Bitcoin ETFs. Wednesday marked the start of trading for these ETFs. On Thursday, Bitcoin's price briefly topped $49,000, a milestone not seen since December 2021. However, at close to $46,322, it has completely erased any gains it may have had before. A lot of businesses, not just ARK, think Bitcoin's value will skyrocket in the near future. The recent prediction from Standard Chartered Bank hinted that by the end of 2025, the price of Bitcoin would approach $200,000. The exchange-traded instrument, which debuted in November of 2004, was used to make this prediction. In the 7 years it took for gold at P holdings to mature, the price of gold soared by more than 4 times. I will address the question of fees later on, but first I think it's vital to highlight 3 competitive advantages that are quite significant. First, there is our infrastructure and the way we run our business. Throughout the exchange-traded fund industry's unprecedented ups and downs, halvings, forks, airdrops, and other unprecedented events, our partner, 21 Shares, has built this infrastructure and managed 40 separate funds. As a result, our infrastructure has been tested extensively. Second place goes to research. You already know that we publish all of our findings in a public domain. Our inaugural blog, which focused on Bitcoin, went up in 2014. Our initial white paper, which dealt with Bitcoin, was insufficient to cover the 3 rounds of funding that we conducted in 2015 in collaboration with Art Laffer. We entered the Bitcoin market around $250 and have remained there ever since. In our opinion, this is simply the beginning of the story. Our extensive investigation has led us to the conclusion that we should hold a Bitcoin brainstorming session and prepare a report on the cryptocurrency every month. Consequently, following in the footsteps of our partner 21 Shares, we will keep making our results publicly available. Our sales staff started selling our exposure to Bitcoin in 2016, which is the 3rd advantage we have over our competition. We must not overlook this matter in our evaluation of our competitive edge. We then chose to team up with Resolute Investment Management. Words like, "oh my goodness, what is this?" would come to mind when I recall the early days. Consequently, they were compelled to learn more about Bitcoin, and they closely monitored our inquiry, leading them to a firm belief. Investing in Bitcoin has undoubtedly paid off. 11 spot Bitcoin exchange-traded funds, not happening in my opinion. The demise of some and the consolidation of others into bigger companies are both plausible outcomes. Larger companies may buy smaller ones with a concentration on pure play, since they need additional experts in that field on staff. So I think we'll be down to 3, maybe even 4 after the consolidation and closing process. There's a good chance it will be 3. I completely agree. At the age of 21, this is noteworthy. Anyway, Since 21 shares is our business partner, it should come as no surprise that the total supply of Bitcoin will never surpass 21 million. There is some significance to that now. Profit maximization is not something we are thinking about with this spot Bitcoin ETF. Bitcoin is now being considered a public good. To rephrase from a technical standpoint, it will serve as the internet's superhighway. Even though it was feasible in the early 1990s, when the internet was just starting to take off, engineers failed to include this Bitcoin blockchain technology. Why is that? Key reason being that no one ever thought this network would be used for banking or business before. Finally, a decentralized peer-to-peer network is about to emerge, and with it a native online money that will do away with middlemen. Giving investors as many opportunities to learn about and invest in Bitcoin as possible is our top priority. Fees are absolutely not something we want to deal with. Plus, ETFs, exchange-traded funds, are really simple to get your hands on. Therefore, we are ecstatic to provide a spot Bitcoin exchange-traded fund and to be a part of the ecosystem. Considering where something came from is obviously important. In my view, this is a very bad decision. From a strategic standpoint, I think it's a bad move. Another way of looking at it is that Vanguard is basically saying that nothing will change in the world. Unfortunately, these new financial trains will fail miserably. There will still be 7 parties mediating transactions between buyers and sellers, and the system will be burdened by each of them. Furthermore, we have no faith that this will prove to be true. Truth ultimately triumphs when problems arise, invention steps in to fix them. There is a lot of tension in the financial sector right now. Plus, we believe that blockchain technology and Bitcoin in particular will probably eliminate a lot of the systemic friction that is there right now. The fact that they are denying their investors the chance to be a part of the world's first ever global decentralized private rules-based crucial term there, monetary policy. And monetary system is another reason why I think this is a terrible mistake. My mentor, Art Laffer, may be known to you if you're familiar with the Laffer curve. He's also an expert in the field of financial analysis. This, he claims, is the moment I have been waiting for 50 years, ever since the gold window was closed in 1971. He is quite enthusiastic about this emerging asset class. Furthermore, I hold Vanguard accountable for this further mistake. Because of this, a previously untapped asset class is unable to reach its target market. Have any new types of assets surface that we should be aware of? Conversely, if it shows a very low correlation of returns to other assets or is genuinely non-correlated, then diversifying into this new asset class can help you get more out of your investment dollar. As part of their ethical obligation, advisors should investigate this emerging asset class, in my opinion. Furthermore, they are strictly prohibited from collaborating with Vanguard in any way. I think this is a bad strategic move, to reiterate. But again, disruptive innovation is what we're after. We don't do anything else. Presently, no other innovation on the planet can compare to this one in terms of scale or potential for disruption.